Hey guys, Austin the Money. Today I'm going to show you guys my top 7 stocks for covered calls, cash secure puts, and the wheel strategy altogether. So, further ado, stock number 1. I'm sure you could guess what it is, yeah? Nvidia. In my opinion, this is the king of all stocks for the wheel deal. I mean, this is just it's got great implied volatility, great premiums, $3 trillion evaluation. It's the strongest AI competitor. This stock's not going anywhere. Absolute monster to do the wheel on. And if you've noticed, the past 3 months, we've pretty much traded sideways. I mean, 127 to 124. So this was great. If you've been wheeling this thing for 3 months, you're probably up a good, probably at least 4 or 5% if you've been wheeling it correctly. All right, second, Cloudflare. This is a cloud stock. I'm sure if you guys have iPhones, you know iCloud. This is Cloudflare. They do a bunch of cybersecurity as well in the cloud-based area. Great stock. If you zoom out, you can tell it already hit its bottom, right? $40, and we've been slowly creeping up since then. So I wouldn't worry too much about this stock falling. It's already fell. It's slowly, gradually making its way back up. This is also a profitable company. They are posting profits on every quarter now. And as you can see, they are growing. They've got a fair value at 87. Another great stock. I'll show you guys an example. Go 4 weeks out. And if you guys own the stock, let's say you wanted to sell a call at 87. 35% volatility. Pretty decent. You know, it's not the greatest, but it's pretty decent. I like to look at, 35% at a bare minimum. I preferably like to look at 40% and above, because when you see implied volatility at 40% and above, you get, pretty good premiums. But Cloudflare, if you guys can't afford Nvidia, boom, Cloudflare, cheaper option for you. Number 3, Enphase Energy. I know what you guys are thinking. Blah, blah, blah. This stock sucks. Well, yeah, because interest rates skyrocketed, all right? And guess what they're doing now? They're cutting interest rates, all right? And then also, check it out. Nvidia already bottomed, Enphase Energy, it's already bottomed. It's been trading sideways this entire year. You could have made so much premium this entire year just selling covered calls on it or cash secure puts. I mean, that's too easy. It's too easy. It is, they were profitable. I'm not sure. Yeah, they still are. They're still expected to drop 77 cents per share on the 22nd of this month. So they are still profitable. In solar, I'm iffy on solar, on the futures of it. I think it does have a place. I'm just not sure if the adaption is going to be crazy, like a lot of adaption. I think it's going to take a while. Like, I think EVs are adapting way faster than solar would. Maybe in 10 years I could see solar kind of really taking off. But still, this company is not that big. We're looking at a $14 billion market cap. And since it just had its earnings compressed, it is going to accelerate its growth. Like, look, you can see it bottomed in Q1, Q2, now look at Q3. We're picking it back up. We're picking back up the earnings growth. So if this company over the next couple quarters starts growing its earnings back, which it looks like it is, this stock could easily go, it topped out at over 300, I think, before, right? Yeah, over 330. I mean, it could easily get back to the 200s. So if you did want to roll cover calls on this, I would definitely try to go a little further out of the money, just especially with the earnings coming up, because these earnings could be great. But if it was me, I'd probably go a little bit more out of the money. with these just because the stock has so much room to pump, really. And it's already bottomed, so pretty fair valuation right now, too. Number 4, Sofi. For all of you guys that have small accounts, this is a great option. Wow, it is up 7% today. That's crazy. I've actually been waiting for it to dip into the 6s again. I'd like to buy it under $7, but I guess that's not going to happen anytime soon. SoFi, they're really changing. They're really changing the bank game. You know, they're a one-stop shop. They do student loans. They do personal loans. They do every loan you could imagine. They're only at less than $9 billion market cap. They have tons of room to grow. They've just became profitable over the past 3 quarters. Yeah, this quarter, this month will be the 4th quarter in a row. So 1 year of profitability. I want to own this stock. I owned it in the past, but I kept changing my mind on what strategy I wanted to do in the market. But with the premiums I'm getting from Nvidia, I will be using those premiums to buy SoFi. I already have an alert under $7 turned on. As soon as that alert goes off, I'm getting me at least 100 shares right off the rip. And then maybe average down from there if it keeps falling. If not, I definitely would like to own, I'd like to own at least 500 shares of SoFi. I think that's pretty fair. But yeah, huge believer in this stock. The earnings growth is insane. I mean, it's over 40% a year. It's really nice. Really good company. And it's only $8, so you only need, $850 to buy this stock. $836 to be exact. So this is a really great stock for small accounts. It's profitable, has very huge growth ahead. And if you check it out, it already bottomed. And now we're slowly on the rise again. So another good opportunity. Number 5, CrowdStrike. Yeah, they had this huge outage right here. Boom, whatever. But look, it bottomed. We're moving back up. Still a little bit expensive right now. I feel like CrowdStrike, you can see how much from that outage in July, you can see how much effect they have on the world. So they are a very powerful company, and they're pretty decent size, 71 billion. A little expensive. I like them better under 250. But this is a great company. It's definitely a company for the long term, the long haul. Like, this is a company that's not going anywhere. Premiums are pretty decent as well. If you were to sell, let's just say at 310, you're looking at 37% implied volatility. I mean, you get $420 right there. If you sold closer, you get $655. It's a decent amount of money. I mean, this right here is over 2% return in 21 days. 3 weeks, you're looking at a 2% return. That's crazy. All right, next stop. Cava, food. They're kind of similar to Chipotle in a way. They do, what is it? It's called, is it Mediterranean? It's basically a healthier alternative to Chipotle. Long story short. They are killing it. I mean, look at the past year. They're up 322%. They are absolutely killing it. This is in the food industry. And they're only a $14 billion market cap. Only 14, but they're still tiny. They're not that big. Wanted to get you guys a few different stocks in here. That's why I got a bank stock. I got a restaurant stock. But technology is just the obvious winner. But Cava, another good one. I think the implied volatility is pretty insane on here. Sell covered call. We'll sell. We'll go up to 132. You're looking at 40% implied volatility. That right there meets the criteria. I mean, you get $235. That's over what? Well, this one, the 131, this is this is what, 2.5% return in 3 weeks? Nuts. Absolutely nuts. Next stock, AMD. Pretty much Nvidia's little brother. Long story short, Nvidia's little brother. All right. AMD is also on the uptrend. We bottomed here basically at the worst time of the market down there. And I actually bought it down here. And then I sold it right here. Looking at it now, stupid, very stupid trade of me. But that's what I did. It is in the past, whatever. But AMD, another great stock to trade. It's a little more expensive than Nvidia, so I would definitely choose Nvidia over this all day. I mean, you sell the 180, you're looking at almost 44% volatility, $380. That's over a 2% return in 3 weeks. Can't go wrong with this. I do think AMD has a lot of market share to gain. Nvidia has like 80% of the PC share. I think AMD definitely has a lot of room to grow. They only have like 6 or 7%. It's something really small like that. And then I think Intel has some, and then there's a few other smaller companies that have a little piece of the pie. But AMD, I really think they have a lot of room to, like a lot of share to get. Like I think they can take some of that from Nvidia and really grow. So this is a $276 billion market cap. A little bit expensive, you know. I would definitely, I mean, look, it was just in the 130s a month ago. I would probably wait until it got closer to the 130s again if I wanted to hop into it. That's just me. All right, and the final stock, Tesla. You could have guessed that, right? Tesla's at what, $250 a share right now? Let's go out 3 weeks. Let's say I wanted to sell it. I bought shares right now. I wanted to sell at $260. $1,300. Absolutely insane. Nah, there's got to be earnings. That doesn't seem right. There's got to be earnings. That seems a little too high. Earnings are the 23rd. Okay, so we'll go out before the 23rd so the earnings don't factor into that. All right, we'll go to 260. Look at that implied volatility, 64%. Absolutely insane. You could sell. If you guys are still if you guys are still sticking around, I'm gonna show you guys a very cool, neat trick. Okay, this isn't it, but I'm about to show it to you right after this. Anyways, you can make about $850 off of 260. So what is that? You're looking at like 3%. In 2 weeks, you're making 3%. All right, now for the trick. That's insane, by the way. 3% in 2 weeks is absolutely nutty. For the trick, let's say you buy it right now, $250 a share, okay? Now, let's say you wanted to make guaranteed money. You would sell this call. Look at your break even, $255. That's what, $500, right? In 2 weeks, you are guaranteed to make $500. Even if Tesla fell $15 a share, you are still going to make $500. Now, let's say Tesla fell $21. Let's say it fell to $229 on your expiration date. You would collect about $2,500 in 2 weeks. I mean, that's nuts. $2,500 in 2 weeks is worst case scenario. $2,500 in 2 weeks is worst case scenario. Okay, best case scenario, I mean, you just collect the $500, right? Because if you bought it at $250 and you sell the $230 call, that means you're there's $2,000, okay? To get from $230 to $250. You're looking at $20, right? This is selling for $24.90. Well, it's really $25 because the middle of this is $25. So you could probably get $25 out of it. That's why the break even says $25.5. You are guaranteed to make $500 in 2 weeks. And if the stock crashes, you're making $2,500 in 2 weeks. So literally a win-win scenario here, okay? Because if you buy it at $250 and it crashes and you collect $2,500, it'll be just like you bought it for $225. Absolutely insane strategy. I'm really surprised not a lot of people are talking about this But that is an absolutely nutty strategy if you guys just want to make like almost guaranteed returns. Now, if we were in a slight downturn in the market, and let's say the market is kind of bearish, this would be a killer strategy. I'm not talking like 2008 bearish. I'm just talking like, okay, we're going to hit like 5 to 10% pullback. Boom, this strategy would kill it because you would still be making money while everyone else is losing money. Absolutely ridiculous. That is a hidden strategy. And you could do that with any stock. I'll show you Nvidia right now, okay? Let's say you buy it 224. Go out a couple weeks. I mean, usually you want to go out like 3 or 4 weeks. We'll go out 3 weeks. Sell a call. We bought it at 124.63. Boom. Your break even right here, 126.73. So guess what? The share price right now, 124.63. You're going to make $210 on this trade, okay? In 3 weeks. Guaranteed you're going to make at least two, and then your shares get called away, so all of your risk is off the table. In worst case scenario, Nvidia crashes more than $10 by that time, you're making $1,260. So worst case scenario, you're making more money. And then guess what? You factor in, so let's say it does do that, okay? You factor in what would your average cost be, okay? So you take 124.63 minus 1260. That puts you at about 112, okay? So now your average cost is roughly 112. So then you'd go out, once the share price comes, or once Nvidia tanks, let's say it goes to 110 or whatever, your average cost would be 112. So then guess what? You would factor that in. You'd go down and you'd factor in 112 to your next, 3 weeks, 4 weeks out strategy. And I can explain that better in another video, but I'm going to end this one because I feel like it's kind of going on a little too long. But yeah, guys, and portfolio update, we're up a little over 0.5% today. But thanks for listening.